Good
Yes,
evening.
please, you can hear.
Okay, great.
Mhm.
I think I just have joined us. And hello, Emmanuel. I call him Pastor Titi.
I feel right.
You're welcome. And
Okay. Thank you.
yes, yes. So we would like to start with a prayer. I'd like to ask a volunteer to pray. Just somebody pray for us. Hello, Jessica, can you hear me?
Yes, please, I can hear you. Let's pray.
Okay, great.
Most gracious and everlasting Father, we thank you for this day. Lord, we have gathered once again to learn. We pray, oh Lord, that your presence will come and dwell with us. Father, come and teach us, Lord, and grant us retentive memory. Lord, bless the works of our hands that we would make impact in Jesus' name. We commit the speaker to you, O Lord. We pray that may you manifest yourself in him. In Jesus' mighty name we have prayed. Amen.
Amen. Thank you so much for that wonderful prayer. Okay, so before our speaker joins us, um, I'd just like to introduce us. Okay, so my name is Lasia Kondo, and we've been doing NWD Convos for like 2 years now, and then this is like our 18th episode. Yes, and today we want to talk about funding and how to how we're going to fund our business and some of the things that we need to do to put our business in the right shape to be able to fund our business. Also, Emmanuel is going to share um, a lot of tips. You know, he's been working in the banking and finance field for like 10 years, you know, and he was supposed to facilitate a program and talking about funding, and it didn't happen. So me, I went for my tutorials, and it was an amazing 1 hour class session. And I felt like, no, I'm not the only one who's supposed to hear this. And I have a community that has to hear this as well. And he said, okay, he's going to share this with us. This is something people pay him for, but we got it for free. And so, please, can we give him some emojis just to say thank you, you know, for having him on this session. Please, let's see some emojis. Let's give him some appreciation. Yes, yes. And so, um, yeah, and I learned a lot, and I felt like this does not have to stay with me or just stay with him. And so we put together this webinar for him to come and express myself. Normally, it's going to be a question and answer session, but today is going to be a different thing. He's going to have the floor. Ask him any question at all, any question at all, and then he would do justice to it. So, with not too much talking, let's um, let's give some thumbs up and some celebration emojis for Mr. Emmanuel Tete Agbernor. Yay. Pastor Titi, the floor is yours.
Thank you, Pearl. I think this was an elaborate, what do we call it? Welcome or introduction. Anyway, it was needed. People, once again, my name is Emmanuel, and let's get going. I think I've been following your post. Unfortunately, I haven't been able to join noteworthy conversations. Thank God today I'm here. So I'm not only going to learn, sorry, I'm not only going to speak, but I'm also going to learn from you. Okay, so feel free, let's have a conversation. Okay. Um, like Pearl said, I have been in the banking and financial industry for some time now. I don't know everything, but I know some things I'm willing to share. And I believe that's why the Lord made it possible for us to be here today. So once again, thank the organizers for this platform. A very big thank you. And then also thank you to everyone that is here today, because you could have chosen to be elsewhere or be even watching a football match, but I decided to be part of our conversations today. So I'm excited to have all of us. Let's begin our conversation. Let's go straight into the business of today. And today we are discussing funding your business as a young entrepreneur. There are key words in this theme for today. The first keyword in here is funding. Number two is business. Number three, young. And then the fourth one is an entrepreneur. So let me start from the last one, which is an entrepreneur. And if I recall my economics very well, we talked about the four factors of production. Um, Please, if any of you remembers, you can mention it. Four factors of production. We talk about land, capital, labor. And I think the fourth one is entrepreneur. And what we know from basic economics, Econ 101, is that the entrepreneur puts together all the other three factors of production to engage in any form of services or any form of goods, that whatever business that we will talk about here. So if you are on this call and then you call yourself an entrepreneur or you are into any form of any business, then you are looking at putting together some factors of production, which is one, a capital. You're looking at land and then labor. Today we will be dwelling a bit more on the capital, which talks about funding. It will take us to funding. And then the other two, which is in the middle, business and a young. Young or youth defines where you are and stage of life, right? Some people say being a youth is just in the mind, or as age is just a number. So wherever your mindset is, whatever the mindset be, um, we consider ourselves as youth. And what it means is that it's within a certain time frame, and we are privileged to record ourselves as youth. What it means is that we are in our prime and that we are able to achieve much. We have our energy still alive, we have our strength still alive, our ambition, everything is still alive. And starting at this particular time or having these convos at this time of our life is very crucial. Let's come back to business. Talking about business means we are then ready to engage in some form of activity that will generate some form of revenue, and then on a larger scale may even lead to profit. I mean, I said may because not every business philosophy is, let me say, with the goal of making profits. Okay, that's why we have NGOs, and they are not profit making. Okay, not every business philosophy is with the goal of making profits. Depends on the business philosophy. So we'll look at all these things and then we'll find out where we are. Okay. Let me proceed. Why talk about funding, or why the need for funding conversations? Why the need for funding conversations? Number one, funding is crucial because it helps us to kind of activate our ideas into reality. So what we will call startups. If you have an idea, it could be very brilliant, ideas that are able to, even solve generational problems. But if you don't get the right funding, that idea is as good as nothing. It dies off. So having funding conversations and knowing what to do is very crucial because it helps us to bring our ideas into reality or form what we call startup businesses. Number two, funding conversations are key when we want to talk about scaling up, that is growth. So, one, your business, you may have an existing business. Business are in stages, okay? So, if we'll be talking about the various stages of business, at least we'll talk about three major stages. And this, whichever stage that you are, you need some form of funding, okay? So funding, we talk about funding in scaling up or growth. Also, funding needs or funding conversations are very key because you need to build what we call buffer, okay, against some form of fluctuations, economic fluctuations, because we would all understand that not all times are equal, not all times are the same. In the economic cycle, we would have things like the cyclines and then the endoclines. Okay, we have the peak and then we have the troughs. We have times that we say the good times in economics, and then we have times that we say these are not really bad times, but recession. Economic is in recession. Things are on the decline. You need to build up buffer for times like that so that your business is able to withstand um, shocks. The last one I'll talk about is to strengthen management or controls. Strengthening management or controls. Some forms of funding structure, which we'll be looking at shortly, helps management or helps to strengthen management or helps management to put up controls that will scale up or help the business to operate on another level. Okay, so I've mentioned four things why the need for such a conversation. Um, I talked about funding ideas or into startups, and then I talked about scaling up and then expansion. I spoke about building up buffer against fluctuations and economy, and then strengthening management and controls. Um, I wish I could take a pause here and then we'll come up with questions. But please let me know if you have any questions. If at any point of time you have a question you want to speak up, just come up and then let's talk. I want this to be very interactive. Okay. Don't hide behind your microphones. Let me not feel like I'm in a lecture room. Okay. I want us to have a convo as well as us to have a discussion. Okay. All right. I want to move to talk about um, as an entrepreneur or as a businessman, the need to have the right mindset as an entrepreneur. Um, there are a lot of people that go into business for different reasons. Okay. I wish someone could tell me one of the funniest reasons that people can go into business, right? Maybe I wouldn't say, oh, am I permitted to speak to you?
Oh yes, please feel free.
Okay. I can feel free. Okay, sure. Before you come and charge me for speaking vernacular on the call. I can't give you any money if you want to charge me. Okay, so strange, funny enough, we have people that have seen colleagues do some kind of business and say, as soon as I cry, me cry, meet me, and then they take up a business only to realize that it's not that easy. It's not on the silver platter. They would have pushed in some money, they would have invested time and everything, and it all goes down the drain. So, having the right mindset as a business person is key to having your business outlast its time. Number one, and having the right mindset, you need to be able to identify and solve real problems. Identify and solve real problems. Identify and solve real problems. It's a certain mindset that you must have as an entrepreneur. Okay. What makes you an entrepreneur? What puts you in business? And I think some of these things you know it already from your maybe your MBA class or your business class or courses that you may have studied. We all know. They'll tell you find a business, find an idea, find a problem, and then solve it. Yes, but the issue is, are the problems real? Because if they are not real problems, if they are just fictitious problems, then at a point they will just fade away. And when they fade away, what it means is that your business does not have any grounding. It does not have any what do we call it? Uh, any foundation. It will soon fade away. It cannot outlast time. So find a real problem and then provide solution to it. Number two, you need to have the mindset to say, look, I'm ready to start small, or I'm ready to start um, with whatever I have or wherever I am. The mindset to be able to start small and then scale up. That is not to say you are waiting to start tomorrow. In fact, you can actually be waiting and waiting forever and never get to start. So be willing to start small and scale up. Number three, in building a right mindset as an entrepreneur, you must build what I call credibility. Credibility in the side of your clients, and then if you are trading in the respect of your suppliers or your service providers. Whichever vendor that you deal with, whatever stakeholder that you are involved with in terms with regards to your business, number one, you need to build credibility. Credibility. Then the fourth one or fourth discipline that you need to be able to build up is to try as much as you can to separate your business from your personal life. All right. Someone would say, how is that possible? Because I'm the same person doing the business, right? How am I able to separate the business from me? There are a lot of people that have bent themselves out because they were not able to draw clear lines between themselves and the business. They don't know where the boundary of the business ends and where their personal life begins. And even that, we are able to also separate our business finances from our personal finances. So sometimes we can actually chop business money, and we don't know that we are spending business money. Okay, you should be able to develop that discipline, have that mindset. And the last one I'll talk about is being consistent. Being consistent. Being consistent does not mean that you're going to have it on a silver platter. You must build that resilience in the mind that whatever business that you're going to start today or you have started or you're about to scale up is bound to face some challenges, is bound to face some roadblocks. But you should be determined to be consistent all through, I beg your pardon, and then be ready to scale over the blockades. All right, we've spoken about two things already, and we are running. I'll soon take a pause and then we'll start having the conversation. So please be noting your questions down, and then if you want to interject as well, you can come up. Having the right mix of funding goes a long way to help the business. Okay, having the right mix of funding goes a long way to help your business. It's something that you need to know. I'll be talking about the mix of funding. What I mean by the mix of funding, I'll talk about it briefly, and then we will progress. But in the meantime, let me talk about the three stages of your business, of every business, and then against the funding need or the appropriate funding that we should be looking at. And then I'll move then into the various funding in details. Okay. Your business number one would start, every business starts from ideation. Okay, so every business starts as an idea. Sometimes it just begins as a conversation. It just begins by an observation. It just it can also begin by a challenge that you faced personally. And then you want to build a business out of it. So every business begins from the stage of an idea. And that's what we call the ideation stage, right? At that stage, the business has not really formed. Sometimes, even yourself, you don't have the full grasp of it. You have not even been able to determine the length and breadth of that idea yet. The thing is now forming within you. You are brainstorming with other people, you are making research about it. You don't even have much info in it yet. That business idea has not really been tested against time. It has not come against the test of time yet. It has not met all the economic conditions that could come up within a certain regime. You know, assuming that you were planning or you got a certain business idea post COVID, let's say a month or three to COVID. COVID was not a thing that anyone anticipated. Yes, there has been some pandemics in times past, but that has been so long enough. No one really anticipated or expected a thing like that. And your business model or idea did not factor in anything like that, and it was met with a shock of COVID. That business is likely to face some heavy challenges. A lot of businesses collapsed, even businesses that were existing even for some years before COVID came, were met with some stern challenge. Some could not stand on their feet. Some could not even come back after COVID. So at the ideation stage, there isn't much um, you could do in terms of funding. However, what has been tested and works well, which I'm proposing, is what I call funding from your personal savings, okay, or what we will call bootstrapping. So we'll have funding from your personal savings, family and friends, works at that stage. We'll go a bit detail into that. But the ideation stage, you should be looking at family and friends, and then some personal savings. And that is why somebody would say, how about me? Who currently, I don't have any form of income, let alone to go and talk about personal savings. How do I get started? In Akan, we say, yeah, the nam ne yinam, right? Yeah, the sikasi ne yisika. I believe that whatever business that you want to do needs some form of funding, and you must be willing, because at that point you may be the only person convinced about the idea or the business. No other person will be willing to commit as much as you can. So if you can convince yourself that this is an idea and this is a model that you work, then you will be willing to engage in other forms of income generating activity. It may not necessarily be this business idea. So you can take on some other jobs just to raise money. I think the other time when we were speaking, I cited an example with um, the chairman of Tobinco Groups, a
Yeah,
company.
yeah,
So I watched an interview. I mean, okay, so we hear people talk about how they started their business with some amount of money. And sometimes when you hear those figures, it's a bit ridiculous. You are tempted to, giggle or even make a fun out of it. Sometimes when you get very close to them, you understand their story very well. In this narrative, he said he was once a hawker. He was selling the popular brand of gum that we all know, PK. Now, I don't even know if it's even in existence. But those days in the traffic, you have the PK boys, and they sell everything. Everything means everything. And PK used to be the popular brand, so you can hear them PK, yes, PK, PK in the traffic. If you have not met this one, then you are a Gen Z. Uh-huh. So
Right now it's Mentos.
his mentors, okay. Okay, so he said at a point in his life, he started as a hawker. I mean, to do, this is an interview that I watched. This is not verifiable. But I mean, I'll say this and I'll come back to myself. Okay, I'll use myself as an example. But then he was once a hawker on the streets until he was able to save some money. So one day he met a certain trader who was also into pharmaceuticals. With that money he saved, I think he approached the man and he said he wanted to do some business. And that's how the man introduced him into selling medicines. Then, they used to sell medicine and he would sell to these retail joints, the pharmacies around. He wasn't even trading in Accra. I think the man gave him some consignment to travel out of Accra somewhere, Takrady, and then supply to them. And that was his market or a catchment area. We'll come back to marketing or business development. That's my strong area, though. Also, if I'm not able to get there and then later you want to get to know a bit more about business development, which is key to every business, maybe another time we'll find time to talk about it, right? He developed a market or a catchment area for himself because he couldn't compete in Accra. He was going to those areas, supplying to pharmacies, and long story short, that is how he was able to raise money. He said one day, in fact, in doing that business, he was actually caught, apprehended by the pharmacy council because he didn't have a license to sell that. But they realized that anytime they go for inspections, they were seeing his invoices from almost all the pharmacies within that enclave. And they developed an interest. Who is this man whose invoice is almost in every pharmacy shop that we go to? And then that's how the business developed. They encouraged him. He registered his business, which will be coming to one of the things that investors, being investor ready, will look at it shortly. He registered the business. They helped him to get his license, and then now he could legally trade in pharmaceutical products. Yes, he said at a point he made some money and traveled abroad. He japa. And he worked hard, got some money, and then came back and started this pharmaceutical thing. He named some key stakeholders, some key people within the country that helped him, like Ernest Chemist, for instance. And then we'll talk about networking and partnership, okay, which is also key to your business growth. I'm highlighting some things to you so that you know that your business does not exist in isolation, right? You need to position your business in such a way that you are able to thrive no matter what. Maybe now you are doing a 9 to 5, or you don't even have anything doing at all, but you want to start something. The mindset of starting small or starting somewhere and then building up your capital to actually venture into what you want to start is what I'm talking about now. The ideation stage. Nobody believes in your idea now. Nobody believes in that product now. but you are the only person that can convince yourself. And when you are willing to commit, you can get some family people who will buy into your idea. I've always said that not all fingers are the same. We have some people that right from school, their parents are willing to support their ideas and let them run. I have a friend now who is running some NGO. She's doing really well, she's doing wild things. And simply because when she left school, her dad incorporated her into his business. So whilst he was in his dad's business, he was working on his her NGO aside. What it means is that the dad was helping her to generate some income with which she was using to support her NGO work. Maybe for you, you don't have a dad or an uncle that's able to do that for you. Actually, cry, you are even the one supporting whom the family is expecting some yes, kickbacks from you. So you may not have that luxury of of that. So what do you have to do? You will still have to start small. And that is where you have to save some money and then you begin small. At a certain point when the idea is forming, is taking shape, you can now begin to convince some family and friends to invest in that. And that is the ideation stage. The next step is validation. At that point you have built the model, you have built a business, I mean whatever service, whatever product that you have tested it for some time and it's going through the validation process. Okay. At that point you can have people like customers who have even tried your product to begin to show interest. They may even be willing to do some sales upfront. These are people that will be willing to say, okay, let me pay you some amount of money ahead of time while you get my product delivered, or you get service delivered for me. I do a 70%, ahead of, and this is helping you to move from that startup, that ideation stage to a certain process where you are gaining validation. At that point, you are able to also get something that I call small grants. Okay, so we'll come back to grants, right, when we are dealing with the various forms of fundings that are available. And then people do engage in some competitions as well. You're lucky, and then you get competitions around. You can go and contest, make some small money, and then you support your business. Okay, there are hubs like KIC, like Cosmos, is it Cosmos Innovation or Investment Center, right? These are people that they are hubs that with ideation and all that, people go and do a pitch, and then if you happen to have that, well, I've sat on some boards that have given supports to businesses like that and help them to scale up from that level. And then the third stage is when you call the growth stage or scaling up. So at this point, you have modeled the idea, you have moved from ideation, product validated, it's already running, it's already out there in the market. You have done some 1 year, you have done some 2 years, you have seen some cash flows, you are able to do some good projections here and there. And then now you say, look, I have my feet firm on the ground, I know the terrain, I now know the shocks that are in there with my suppliers, shocks, what my customers expect of me, and then I'm ready to scale up or I'm ready to grow. At this point, you can now begin to look for funding from the people. I mean, um, the banks, the likes of the banks. You can now begin to look for funding from investors or equity partners. So please let's take note. The ideation stage or the first stage of your business, you may be looking at um, personal savings or family and friends, bootstrapping. And then the second level, you can have even customers that have tested your product to be doing some upfront payments for you, and then small grants, also competitions. The third stage, which is your growth stage or your scaling up, you are looking at funding from the likes of the banks or financial institutions. You are looking at private or institutional investors, and then equity partners. At this point, I'll move straight into various forms or kinds of funding that is available. Various forms of funding that is available. I feel like I'm talking too much. Okay. But let me try and then wrap this up so that we can come back and have a conversation. Give me like some 10 minutes. I'll wrap this and then we have a conversation. Various forms of funding or kinds of funding. There are three major umbrella, okay, of funding that you should be looking at. Number one is equity, number two is debt, and number three is grants. When I say equity, what do I mean? Equity, it's more like equity from ownership. Ownership. So equity would mean number one, some personal savings or some personal cash that you have put aside to set up the business. So that is your own funding, equity, right? Equity can also come from external investors. But what does it mean when you have external investors coming in? Investors would be interested in your business as an equity or debt. But debt is another form of funding. So I want to talk about investors interested in your business as equity. When an external investor is coming into your business as equity, what they mean to say is that I have money, I'm ready to support the business to grow, but you would have to give me a portion of to own a portion of your business, right? So, i.e., I have a kinky business, like our sister Pearl, Kinky Brothers. Please, how many of us have patronized Kinky Brothers? If you are here and you have not bought anything from Kinky Brothers yet, tomorrow you should be ordering for lunch. Okay, right. So yes, we have a business, Kinky Brothers, and then she funded the business. Let's say I funded the business. This is me. I funded the business with my own capital. I started the business. Now the business have taken grounds, is doing well. But now the orders are such that my initial capital, is not able to serve the demands. So I need to, that's the need to scale up, right? I'm looking for some external investors. Now, these investors would now come in and say, okay, I have some money to give you. I'm ready to put in, say, 50K USD. Conditions such that you give me a 50% of your business ownership. What that means is that any gains that we make in the business, we share it 50-50. Because if it is 50% ownership, then whatever thing that comes in, we share 50-50. I just use 50-50 as an example. But when you are going for investment, an equity fund raising, then what you are saying is that you are willing and ready to share the ownership with whoever is coming in as an investor. That is basically equity. And there are pros and cons. Okay, there are advantages to having external investors, and then there are some disadvantages. One of the major advantages is that you have funds readily available to scale up. The disadvantage is that One disadvantage is that you are now going to lose your 100% ownership of the business and now begin to share your gains with whoever is coming in as an investor. Whatever percentage that you agree with them, you are no longer going to have your 100% ownership anymore. Recently, if we paid attention, Casaprecon came on the stock market to be enlisted on Ghana stock market. What Casaprecon came to say is that, look, now I need funding to scale up the business. They're actually establishing another plant, okay, a variance of the business. And they're saying that we don't have money to do that. However, we are appealing to the public and we are willing to sell part of the ownership of the business out to anyone that is willing to give us X amount of money to scale up. So they came on the market, they valued the worth of the business, and it says if you want to own one share of the business or a certain unit ownership in the business, this is how much it will cost you. And it said it's one CD 20 pesos. So a unit of an ownership in that business is one CD 20 pesos. And they were hoping to raise, some millions of CDs. That shares was oversubscribed, right? They are actually able to raise the money and raise it more. What it means is that they have now diluted their ownership. If it was 100% ownership by the one who started it, now it is him and a lot of other people that own share in that business. Decision making does not lie with him alone. Okay, so that is about external investors. We have investors such as people that will come in as partners or partnership. We will have the venture capitalists and then we have the angels. Okay, all these people have rules that they play depending on how they come in. The angels will come in, they are interested in the business, they may want to invest in the business to a certain stage and they are willing to check out at a point. The angels operate like that. When they have made whatever gains that they expect within a certain period of time, they don't intend to stay in the business for long. They will sell out their stake in the business and they go. This we call them angels or investor angels. They are just there. Some people who have money and they are looking for brilliant ideas, they are looking for brilliant businesses, problem solving ideas, real problem solving ideas. They are willing to invest or put their money in there. And then when they have made their gains per the projections, they are willing to check out and they move on because they may not want to bear or be part of a long-term management of the business. Let's move quickly to debt. So we've spoken about equity. Equity could be from your personal savings or external investors who are willing to bring some funding to help grow the business. Like I said, equity one comes at the early stage when it is your personal savings. If it is external investors, they may want to see some level of development in the business. So you may not see external investors at the early stage of the business. When angels are coming in, sometimes you may have them at the validation stage where there is a clear guideline, they have a clear picture of where the business is heading. They can put in some money at that stage. Some venture capitalists are ready to do that. When you have given them a clear pipeline of where the business is heading, they can do that. But most of the time, external investors, you hardly see them at the early stage or the ideation stage of the business. Let's talk about debt. Debt simply means you are borrowing to go and fund your business. Okay. And look, let's not make borrowing look like it's an evil thing. However, whatever you used borrowed money for is what determines whether you become a slave to the lender or not. Because at every stage in your business, you may need some form of funding. And like I'm saying, this funding could be equity or debt. We have people that can serve this particular structure in debt for us. That is where we have the banks, we have your regular, our regular SME banks, the commercial banks, some microfinance institutions. We can have what I call supplier credits as well. Okay, so then maybe I should deal a little into debt. or different kind of debt financing models that are available you should be looking out for. Under debt financing, you may engage a bank. We have what we call the short term or a long term financing. The short term financing, and some banks will define it as within 12 months. Okay, but majorly, we have some between anything between 24 months. We are looking at a short to medium term. After 24 months, beyond 24 months, we are looking at some medium to long term financing. And we can be looking at loans, we can be looking at overdrafts. We would look at what we call guarantees as well. Now, what is the difference between a loan and then an overdraft? And what would even inform your decision whether to go for a loan or to go for an overdraft or to go for guarantees for your business? When you contract a loan usually would come with a contractual um, periodic payments. For instance, you may have a loan that you are supposed to service on a certain monthly basis or a certain quarterly basis based on the structure. And mostly loans are structured around your business cycle. Okay. We are not doing credit appraisal here, so I won't go deep into that. But when you are contracting the loan, you are required to be servicing either both the principal and then an interest on a certain regular basis, right? Or you are either paying the principal and then later you pay an interest, or you are servicing an interest and then you pay the principal afterwards based on the structure that is given you. An overdraft facility runs as a way for the chance to overdraw your account. So yes, you have 5,000 Ghana cedis, and the bank says I've given you an overdraft of 5,000. So it means you can actually overdraw your accounts to a negative 5,000. That is what an overdraft means. So if you have 5,000, you can overdraw your account to say 10,000 and then use it to go and finance what you do. But those financing are usually for short terms. Okay, you want to finance some working capital needs, some major expenses. You want to be doing some salary. Those who are importing, you want to do some clearing. Um, those who are into the logistics space, you want to be paying for some recurring expenditure. You may want to go into using overdraft facilities to do that. Guarantees, for instance, allows you. Guarantee is the bank saying that, look, I know this customer, whatever that they need, whatever assistance that they need, give to them. They will pay you back. If they don't pay you, the bank is guaranteeing to pay. So, for instance, you are a distributor of, say, Guinness Ghana Limited, and Guinness Ghana says, give me a bank guarantee. Don't give me money, give me a bank guarantee. That shows that if I give you goods, you are going to pay me in 15 days or you are going to pay me in 10 days. With the bank knowing how credible you are, the bank can give you a guarantee. You give to Guinness Ghana Limited, and then Guinness Ghana will give you goods to go and sell. But you see, terms and conditions apply. The bank would always make sure that they have done their due diligence to make sure you are capable of selling the goods and repaying Guinness Ghana before they give you a guarantee. So the bank will go through its normal credit appraisal process. If they need to take a collateral, they'll take it. Mhm. If there's no need, they'll go forward and then they give you the guarantees. I'm just highlighting these things so that we are not caught up with time. My 10 minutes is already over. Let me talk about credits, supply credits. Supply credit is say I want to be a distributor of Kinky Brothers. Okay, and I said I have money to buy 50 balls of kinky and then supply to um, a certain events organizer. Okay, I don't have all the money, but I can do 50% payments, and then you give me your. When I'm done, I'm paid. I come and pay you back. supplier credit. They can give you supplier credit up to 10 days, up to 15 days, some give up to 30 days, some even give up to 60 days. It all comes down to your negotiation skills. That's why I'm saying that at certain stages of your life, of the life cycle of your business, you may actually not need a bank loan. Sometimes all you need is your negotiation skills, and you should be able to leverage on that very well, and then expand your business from there. Let me bring in an example here. There's a personal example. How I started from, small, and then I later got supply credit and then scaled up. Okay, so I started with small, I got family and friends support, and then I moved on to supply credit and then scaled up. I found myself in a certain town outskirts of Accra, Oda. That was in the year 2012. I was doing my 9 to 5. Okay, I was working for a certain microfinance company then, 2012, as a manager. And when I went there, I noticed they had a delicacy. Rice was really a thing in that community. Right, you see people doing rice dish in every form. Sometimes as early as 6 a.m., you see people gathered around. So I decided, okay, I can make do some good business out of this. I decided to distribute rice, oil, and tomato. So the normal tomato paste and which other one? The one you call talia, the spaghetti. Okay. Please, when I say something and you don't like, don't laugh too much, okay? When we were young, we call it talia. So yes, I decided to go into that business, but I didn't have enough money to be buying and supplying. What did I do? First of all, I had to find my market. I went there into the community looking out for people that had smaller food joints. Okay. They were doing rice dishes of all forms. The Czech people were there. They have some delicacy they call abenkwamo. That is rice, white rice served with abenkwai. Okay. Yeah, very nice meal. And wache sellers and all that. So I walk to them. I said, look, we have a warehouse. We supply rice, and if you don't mind, we can supply you rice, and we'll allow you to pay on daily basis. So mind you, these were people that were doing their business. They were buying rice on cash basis. They transport it to their location, and then they cook. I have now remodeled that same. I found a need and remodeled it. What I am offering now is one, I'm selling a product. Number two, I'm offering a service. The product that I'm selling is I'm selling rice. The service is that I'm bringing it to you, I'm delivering to your doorsteps. Number two, I am giving you some freedom to repay over a period of time. So I'm giving you some flexibility in payment. And the people quickly bought into the idea. Now the people were now willing, they were now calling on me to supply. I didn't have money to supply. So I go into the town. In fact, I didn't have any warehouse. But I sold to them that we sell rice. Meanwhile, I didn't have one bag of rice in my room to sell. Then I went to the town, went to the biggest wholesaler in the market square. I said, look, I want to buy your rice on wholesale. Then she said to me, okay, it was a man. He said to me, I can only sell wholesale price to you if you can buy 10 bags and above. I didn't have money to buy 10 bags and above. So I need to kick in some negotiation skills. I had only 300 Ghana cedis with me as of the time. That was 2012. It could only buy 2 bags of the 50 kg rice as of then. So I told the man that, look, I at a go I can buy 10 bags of rice. But I can promise you that if you will sell to me on wholesale basis, I'll be able to buy more than 10 bags of rice in a week. And all the people that you sell to them on that wholesale 10 bags, they go and they come and buy in 2 weeks, every 2 weeks before they come back and buy. Me, I can buy more than 10 bags in 1 week if only you sell to me at wholesale price. The man looked at me from head to toe. And I think favor found me. So we started business. That day, I bought 2 bags of rice. Business started. I got some Opel cadets. How many of us know Opel cadets? It has boot, long boot. Carried the 2 bags of rice. Delivery began. Sharp. That's how I started my rice distribution business with 300 Ghana cedis. Please, this one is no exaggeration, like, it's not the one that they tell you they started with 2 cedis. I started with 300 Ghana cedis, and this is how I started. So, first day, I did my supply, and then the following day, I started collecting cash from them. The woman will sell, and then I go to town, I go and buy, I supply, I buy, I supply, and I was collecting and then using it to buy. At a point, demand was overwhelming because my daily collections was not enough to meet my daily supply. So I need to call family and friends. At this point, I have moved from idea. I have established the business. I have a pattern. I've been able to prove to the people that look, this is what I do. This is the yield that is coming. I had a friend that had some loose 1,000 Ghana cedis be that he wasn't. He said, well, he will need it in 3 months. I said, beg, ship that money to me quickly. He forwarded the money to me. I escalated the business to another level. If I started 2 bags with 300 Ghana cedis, you can imagine what 1,000 Ghana cedis could do at the time. I started turning the money around. Now, the man realized the volumes I was selling or buying from him at the time. I'm sure none of his existing customers that were buying at on the wholesale price could give him that volume. So the man was not convinced. So why not? Why can't I do credit for you? So now when I go to the man, he is willing to give me, I do a 50% down payment, any amount that I want to buy. If I'm buying 10 bags of rice, I do a 50% down payment, and then he release 10 bags of rice for me. I'll go and sell, and then whilst I'm collecting, I come and pay him. I do another deposit, and he releases, and that's how the business scaled up. So I have just moved you through. Don't ask me what has happened to the business. In fact, I made money out of the business till I was ready to leave the town. And we'll talk about succession planning. Okay. I didn't have good succession planning. So pitfalls, things that you should avoid when you are starting a business so that you don't burn your fingers. I didn't have good succession planning. So when I was leaving, I left the business in the hands of some 2 gentlemen. They were able to take the business, manage the business at a point. At a point, they also had to move. And when they moved, nobody could take over the business. So we collapsed the business, we shared the money and chopped. We all came to sit in Accra. Okay. But this is it. We started from somewhere, we scaled up, we got family support, we got FNF, family and friends support, we scaled the business to another level. Now to the point that we built credibility and our supplier could not give us supplier credit. And then we moved on from there. Right. So I've just run you through equity. I started with personal, and then I now moved to family and friends. I moved to debt because then I was able to get some supplier credit. I didn't take a bank loan. Okay. So we've dealt with equity, we dealt with debt. Let's talk about grants. And grants are mainly funds from donors. Okay. Donors, people, charitable organizations, foundations that have a certain goal they want to champion. They have a certain vision. They have a certain, what do we call it, values that they want to put across. And they will channel money towards these areas to help propagate whatever they want to achieve within a certain span of time. And these are donors. We have a couple of such donor funders around. There are a lot of them. Okay, we may not be able to exhaust their names, but you can actually do some good research and look at donor funders. We have a lot of them. Recently, USA checked out when Uncle Trump came into power. Okay, but USAID was doing very well. You had the likes of, I mean, some UN interventions as well. We have people like the Mastercard Foundation, ACT Foundations. We've had a couple of these, but each of them have a certain goal. They have what they are targeting, what they hope to achieve. And if you want to attract any of these fundings, then you need to also model a business or model your business to meet the expectations of these donor funders. And then you're likely to win some grants. Okay. Um, you should be looking at in these times if you are modeling your business to attract donor funders. One of the things that you should be looking well, working well towards is the SDGs. Okay, um, I mean these are goals that has been set for, I think, 2030 or so. And you can go look out for it. If you haven't seen it yet, you can Google them out and then you see these are SDG goals targeting poverty alleviation, targeting things like renewable energy, gender equity, anything that you would do in that regard. I think there are about 17 of them or so. You can now sit down and then look at, you can have one business that solves or meets about five of them. Because if you have a business that is creating employment, one, you are solving the problem of unemployment. As you are solving problem of unemployment, you are alleviating poverty. Okay, as you are alleviating poverty, you are also creating a certain, so all these things are linked. You can have a business that is meeting about five of the SDGs. Okay, and it puts you on a right footing or on a start note to be able to start pitching for some grants as well. Let me talk about being investor ready. Okay, and then we will close. I'll pause and then we'll talk. Investor ready, being investor ready. Number one, you need to have what we call, or your product must meet what we call the market need. Okay, the market need. Your product or service, whatever you are bringing out, must solve a clear problem. It must give whoever is coming in as an investor to say that the market needs what I'm actually selling. There's a market need for it, there's a demand for it. And when you put your money in there, it will not go waste. Definitely, the business will run. Number two, you must have a clear business model. What I call, some people call it business plan. Okay. You must be able to give investors confidence about how your business can clearly generate revenue and bring them returns. Note that investors are not philanthropists. They are in there to put their money for returns. So you should be able to tell them that if you put your money in, this is how I'm going to use your money, this is how your money goes out, this is how it generates revenue, and when the revenue comes, this is how much we are going to get. Number two, you must be able to convince your investors that you have the best team to deliver. How do you do that? As a person, you should be able to build capacity. Maybe you have the idea, you don't have expertise. You can bring other people on board, right, and form a team to run this idea. Either you are going to employ them or you are going to make them a part of the business. Okay, partnership. But you must be able to convince investors that you have a competent team to deliver or to run this business. You are not going to waste their money, right? It's not like come and invest and then, the next minute we've had people take bad decisions and our investment is gone down the rail. We cannot get back. You must have what we call the business must be scalable. Okay, the business should have prospects. You are starting small, but you should be able to see the bigger picture that the business has growth potentials and it is scalable. That's one thing that investors look out for. Number five, you must have the business must be recognized legally. Sometimes it is difficult to attract investors because we are running the business on that personal level. You see, after you have developed the idea, you have moved to the level of validation. At this point, I don't think the business should be running as a personal and in your personal pocket anymore. You must move to let the business exist as a legal entity, register the business. It costs some money. But as at today, I know that the Mastercard Foundation has some partnership with some institutions that are assisting in registering businesses for free for the youth. So I think if somebody under the age of 35, there are some arrangements like that, partnership with Mastercard Foundation, that's helping people to register their businesses for free, assist them with their FDA license for free. So these are some advantages that some things, arrangements that you can take advantage of. Number six, you must practice very good bookkeeping. I made Pearl post something on the page earlier. Maybe we'll be looking at it. Okay, what SMEs are looking out for, and then what lenders, okay, the people that you are seeking money from, what they are also looking out for. But one of the things is that you must practice good record keeping. Good record keeping. The last one I'll talk about is you need to have a bank account. Okay. You need to have a bank account. The only way we can validate your revenues is when you are able to show us some good history, your financial history. Look, people have lost credibility to the extent that even external auditors would sign for falsified documents, falsified, what do we call it, audited financials and all that. But you see, your bank statement that is signed and authenticated by the bank gives some level of confidence. Okay, so yes, maybe on the face we may want to see what your audited financials looks like, but beyond that, if you are able to prove to us that look, this is the revenue that I've generated, this is what has gone through our account, our annual turnovers, we are doing like this. I'm telling you, there are people that are doing businesses, they're looking for investors. If you ask them today that how much revenue are you generating per annum, they can't tell you. I've sat on panels like that, and you watch people make a presentation, they want to pitch for investors, for funding, and they can't even tell how much they have made in a past quarter or even a whole year. It's not a good practice. What are the pitfalls or things that you should avoid or avoidables as an entrepreneur, a young entrepreneur? Number one, um, you must learn to start small and scale up. Sometimes we want to start big and then we get caught up. As a startup, you have not encountered all the economic cycles yet. The likelihood that you might need something that will kick you down is very high. If you learn to start and build shock and you scale up, it is better. So you are not caught up in the middle somewhere and all your capital is swallowed. I started a certain business model some time back where I wanted to go into trading of a particular product. What happened was that I had limited capital, okay, funding. Now, this same funding, I wanted to use the money to go and acquire a shop. And I realized that after acquiring the shop, I'll be left with nothing to, what do we call it, to even buy stock and trade. So what was I going to do? I now changed the business model. Instead of getting shop and allowing people to come to me, I now decided to go and look for customers and use the money that I had to go and acquire a mini truck or a minivan. Then I can now go and buy. I do no drop. I pick from warehouse straight and I deliver to you. And I was able to build capital from that model as well. From that point, I can now rent a place that I can say warehouse and can now go and buy stock and come and keep in there. And then I now begin to wholesale from that point. Okay. So start a model that would not make you cash flow. Assuming that I use that money to go and rent 24 months and I wasn't having money to go and buy stock, the months will be going 3 months past, 6 months past. By the time I'll be saving car to now buy stock and start the business itself, 6 months of your money is already gone into rent. Okay. So let's learn to start at a point and then we scale up. Avoid expensive, and the word is expensive debt financing. Expensive. Today, it is easy to access funding from some microfinance institutions. But I tell you, those institutions are charging you like 6% per month. And you multiply it by 12 months, and that gives you like 72% per annum. 72% per annum. So say you take 100,000 Ghana cedis, you are paying 72 Ghana cedis as an interest. At the whole end of the year, you would have paid 172,000. How many businesses are able to raise 72% per annum as a margin? You ask yourself. If you are dealing, okay, one of the things, let me chip in this. I think information is available. Any business that you want to venture into, do some good research and then get to know what we call industry margins. For instance, if you are doing FMCG is fast consumable and moving goods. Okay, fast consuming and then movable goods. I beg your pardon, I'm not getting this right. But FMCG is things like your rice, the tissues, things that are usables at home. You run a margin of 4 to 10%. That's industry average. A margin of 4 to 10%. So if industry average is a margin of 4 to 10%, right, and you are contracting a loan at a rate of 6%, already that loan is taking about 60%. Even if you are making the highest end of the margin, it's taking about 60% of your income or your margin already. Come to talk about other expenses. By the time you realize your loan is wiping away everything that you are making, and that you may even end up eating up your small capital that you started with. So avoid very expensive rates. When you want to contract any form of debt financing, just make sure you are clear about how much you are paying. Sometimes we disguise the rates, and I say we because I work in the industry. Simply because at my institution we don't do that, but I know some institutions do that. They won't explain the details to you. They'll tell you 13% per annum. That 13% per annum is calculated on a straight line. So if you are taking say a million cedis, you are likely to be paying 130,000 per annum. There are some institutions will be charging you 15% per annum, and they are charging you a reducing balance. You are sometimes better off on the 15% than the 13%. It's quite technical. We won't go into it today. So avoid expensive debt financing. The last one, pitfall I'll talk about is build systems. This one is on my heart, like it's so dear to me. I beg you and I will beg you in the name of God that any business you cannot monitor, do not venture. Please, you can take it from me as a quote. Any business you cannot monitor, please, it is not worth venturing. It's not worth your capital. It's not worth your investment. What do I mean by monitoring? A business that you cannot track to tell how much or what is happening in the business on regular basis is not worth your investment. Statistics shows that about 70% of SMEs that have collapsed within the first 3 years are as a result of pilfering, stealing. I mean, kind of ye stealing. from stealing by workers or staff, pilfering, bad attitude at work. A lot of businesses have collapsed because of this thing I'll call meanness. Okay, in our part of the world, integrity is not our thing, right? And people find it very difficult, you know. So if you build a business and you don't have systems to monitor, then it becomes a challenge. What you mean is that you have to be running the business yourself. I'm saying this because there are times that you start the business yourself is going well, but you can't handle it all by yourself. You need additional hands to keep growing. Sometimes, unfortunately, the people that you bring on board to scale the business up, because there are no structures and systems to monitor, the people begin to, steal from the business. And in 2, 3 years, if you are not careful, they run the business down. Does that mean we will not hire people? Does that mean we will not scale up? This is one of the fear of entrepreneurs, and people fear to do so. What you can do is what I call build systems. Build system. If you want to move away from a cashless system and you want to take Momo, you want to use POS, you want to build some form of structures, you want to make sure that whoever is supplying stock is not the same person that is collecting cash. Let there be some checks and balances. Let somebody know that you are watching. In fact, I built a business that collapsed under a year or two. And it's simply because when I started the business, I was in it every day. I'll close from my 9 to 5 and then go and do, inspection. We will go through the numbers and all that. I was on grounds with them. When I closed, I do all the rounds and everything with them. At the point, I felt I had become busy and I was getting tired. So they'll come, boss, we need to go and procure this. I'll sign check for them. They go and buy, they go and do the distribution. At a point, I realized that some of the numbers that they were reporting to me as people who have not paid are people who have actually paid their money or people they have actually not supplied goods to. So please learn to build system to curb pilfering. I've listed about 4 business areas that you should be interested in, you should be looking at as a youth. Number one, agribusiness. Number two, you should be looking at the tech space. Number three, you should be looking at some waste management, recycling. Number four, some renewable energy, green energy. Okay, yeah, these are some business areas that you should be eyeing. A lot of donor funders are looking at that space now. Agribusiness, anything within the agri value chain, right from production, processing, anything within the agri value chain. Tech, you want to talk about anything technology, waste management, recycling, and then renewable energy. Please, I take a pause from here. Thank you. Okay, Phil, so I hand over. You can take it up from here. Let's have some questions and then we can progress. Thank you very much. I beg your pardon. I can't hear anyone, so I don't know if someone is
Hello, can you hear
speaking. Okay, I can hear you now.
me? So sorry. I think my laptop decided to give up on me, but my mom was
Oh,
on the call actually. So
okay, right. Okay,
yes.
right.
Okay, so thank you so much. That was like very, very insightful. Me personally, I've heard the story, but I learned a lot of new things today.
Right.
I had a question before I open the floor to everyone else.
Okay.
You mentioned that we should separate our personal life from our business, but I have some branding experts here who would
Okay.
say some people actually brand their business based on their personal life. How do we now separate that from our business? That's my first question, and then we'll take the other questions after.
Okay. Thank you. So it's so simple. Um, you are building a business that would outlast you. So two things. There are people that number one have made a name for themselves already and want to build a business out of the name as a brand. Let me take somebody like maybe which celebrity, say Nanama McBrown, for instance, right? She's made a name for herself within the acting space, and that gave her her brand. Whatever business or show business that she is into came about as her personality, known as an actress. At a certain point, if she wants that brand to outlast her, then she must be able to develop a business that will exist separately from her personality. Other than that, when the brand as Nanama is no longer there, the business cease to exist. Maybe I'm not a branding expert, but branding wise, maybe it's not. But financial aspect, every business person must be able to separate your business operations from your personal dealings. A lot of the challenges that we see with entrepreneurs, especially young ones, is what we call drawings. The accountants call it drawing. So a typical person that does a provision shop, it is this same provision shop that we are feeding from. Enti enyumre na eyi sardine baako na they are kinky so. We don't account for it or we don't pay for it. But you see, that sardine probably is costing a certain 12 CDs, 18 CDs, or 25 CDs. You will need to sell about maybe some 10 pieces or a whole box of sardine to be able to make that as a margin by having recorded it. You have not taken it as a personal expense on the business. Okay, so that is where I am getting to. If I am making, I'm an entrepreneur and I'm running a business, am I paying myself a salary or am I paying myself as a worker? I'm working for the business. At the point you should be able to pay yourself. Maybe in the beginning the business will not be able to afford that, but at a certain point you should be able to do that and separate yourself from the business. Not like you should allow the business to exist beyond you. I don't know if I've been able to clarify your. Um, we may
Yes,
have follow
yes,
up
yes.
questions.
You have.
Right. Okay. Okay. Thank you.
Okay. So we are opening the floor for questions. Anyone with a question, please go ahead and raise your hand, and then we'll take it based on. Okay. Hi, Chris.
Yeah, all right. Thank you.
Okay.
My question has to do with say you are doing a research like people who are into scientific research and the likes, and eventually you find a solution to a problem you are doing a research on, and then you want to turn it into an actual business. How do you, so maybe in the research stage, the inception of the research stage, you don't actually have what it takes to carry out the research due to some of the costs you are going to incur and everything. How do you get say people to buy into the idea, to support you, to first fund the research, and then as and when you get like solutions to, or like practical evidence to solving the problem you were trying to solve, you can turn it into a business, like make trying to convince them that okay, if we actually do this research and we get this, it can actually be a business that's going to generate money this way. How do you get people to buy into the idea to support you with that?
Okay, thank you very much. Let me take that one quickly. Two things. Number one, every research has a research objective. Okay, so for instance, you want to test some products that can serve as alternative, maybe fuel, in place of fossil fuel, or in place of, I mean, any other thing that you can talk about. So you have a certain target, you have a certain goal, you have something that you really want to come out with. Then it would inform you about the various stakeholders that would be interested in this particular research that you are doing. So number one, your research, whatever you are researching into, because definitely you may be researching into so many things, but everything that you are researching, you are having a certain expected end that you are working towards. If you are working in the material space, you want to look at which materials will be stronger than cement, or which materials will give us a stronger concrete if we mix it with clinker. Okay, so you want to see, in place of maybe iron rods, can we use some other alternative materials like fiber? Okay, probably to avoid rusting and then collapse of buildings. You have a certain target that you want to reach. With this, you know the stakeholders that would be interested in this particular what do you call it, research that you are doing. Your negotiation skills kicks in from here, because if it's a it's a research that would benefit some people, you must be able to now learn how to get these stakeholders to rally with you. And that is what I call the negotiation skills. Your pitch deck. You have it may not come on a silver platter, like I said, because some of these researches you cannot fund them in your with your own money. Sometimes you may have some benevolence from family and friends that can help you or support this project. Or you may even have done something to a certain level. And then with that, you can say, look, I want to do a prototype of this, or I want to model this to a certain scale and see how it works. You with this, you engage your stakeholders. Stakeholder engagement is very key when you want to start any business of such sort. Any business of such sort, know the people that would be interested in. Are you looking at, I'm talking about maybe energy, are you looking at the energy commission? Are you looking at maybe some persons that you think um, would have an interest in investing in such? Would you want to start also looking out for some angel investors? I've mentioned about angel investors. These people can come in at that early stage and then fund this research. I talked about some grants, okay? I know a certain gentleman that back then was doing some research in alternative gas, this liquefied petroleum gas. He was doing some alternative fuel source, domestic fuel source for that. And he had to work on that. He got some grants for it. he finished the research. So there again, you look out for donor funding agencies, right? That have interest in that area that you want to research into, and you can make your proposal. You look out for them, and if fortune finds you, you're lucky to be making some good inroads in that area. But like I said, it's not that easy to find funding in terms of research. Uh, but you must be resilient. That is the mindset of the entrepreneur. Very consistent. It may take you some 2 years, it may take you some 3 years, it may take you some 5 years, it may take you some 10 years sometimes. But if you are consistent with it, definitely you will find someone that would come through to support that research and then you scale it up.
All right, thank you very much.
Thank you. I hope that was helpful. I mean, if you have a follow-up question, you can pick it up if it's not too clear.
Oh no, it was.
Thank you.
Thank you too.
Okay, Timothy. Hello, Kay. You can go ahead and ask your question. Okay. Anyone else while we wait for Timothy? Matilda, do you have any question? Okay. Timothy, the floor is yours.
Yeah, hello.
Hi.
Yeah, my question goes to I don't know whether Emmanuel or the third guy is on the platform. Okay. I'm actually working on this software. I'm developing a software with a friend for my company. Okay, and it happens that this software is not only going to help the company, but other institutions are also we can also sell this software to the other institutions. Okay, and now we are looking at the pricing of the software, how we are going to get money. To be able to sustain these apps, we need to also get money. How we are going to generate revenue now. So when it comes to the pricing, that's what I'm saying. I don't know whether it's to the software developers, the tech guys here, or it's to the manual. We don't know whether we are going to charge. Previously, I was thinking it is the people that are going to, it is out of the data that people are going to use to access the software that you are going to get paid. But the developer tells me that is not the case. It is either we charge per head, whoever uses the software, we are going to charge, or we sell the software to the company. And in the case where we are selling the software to the company, then it means other companies that are also expected to benefit from the software, it will be very difficult selling to them. I don't know, but I just want to find out the best pricing method for this kind of softwares. Yeah, that's my question. Thank you.
Okay. Um, let me try and answer this, and I think the tech guys will do the technical bit of it. Okay. When it comes to pricing, one you would have to look at competition. Okay. I'm not too sure whether what you are building is really out of what already exists in the market, right? Whether you may have a certain similar product that is running that you have probably a variance of it. Okay, you would have to look at what competition is doing. Number one, to help your pricing so that you are not priced out. of the market, because that's one of the things. If you don't have an entry strategy, okay, you realize that you have come to market, all right, your products may be very solid, but your entry strategy, if it is not strong, you'll be priced out of the market. So one of the things that you would consider is what competition is doing. Okay. Number two, you talked about the decision to either sell the software to whoever wants to use it. Um, I know there are softwares that we use even as banks. Okay. For instance, a certain software like Terminus. There are a lot of banks that use Terminus, but they would have to customize it to fit into what the bank's internal designs. Okay, so you can tweak it in such a way that yes, people have packages like the way we all buy. What do we call it? The Microsoft packages, right? You can have it tweaked in a way that you can do customization for other institutions. And based on the level of customization that they want, that would help your pricing. So you can have a certain basic price, okay, that you have people users. I don't know what the software actually seeks to address, but I'm sure the tech guys can help. If it's a thing that is for B2B or businesses, then you may want to do some basic usage. You may want to do some customization for them, and that is what is going to help with your pricing. Whatever customization that comes, it comes with an additional earning for you as well. But the key thing that you should look out for is what competition is offering. And it's one thing that also helps you in your product delivery, because there are certain products or certain solutions that you might bring it on the market, all right, um but it may not be as accessibility and affordability is also key in designing product designing. Okay, it's also a discussion for another day. If you want to design a product, what are some of the things that you should look out for? I mean, will people be able to afford and all that? For instance, Elon Musk decides that we want to go to space. Okay, he has a target market. It's not everybody that will be able to pay and fly to space. But he has a target market. There are people that may want to do that, right? Maybe sometime to come, EBF1 will be able to Kobe, right? But he has a target market. Your target market definition will help you to know how to do the pricing as well. But I think the tech guys can help well when they understand the modalities, and they will know whether you should do by subscription or you sell packages. Thank you.
Okay, Timothy. So, what I know or what I have experienced is you are using certain infrastructure to build your software, and your hosting, your server. I'm sure definitely it's going to be a cloud software. You're going to pay for all these things. Now, Google, Amazon, um, I think Microsoft too. They have. We are talking about funding anyway, so I think I'll just chip this in. They, if you're able to present your case very well, they are able to give you free credits for a certain amount of time to be able to host your application on their service for free. Um, so if you're able to pitch your case very well, or pitch your business very well, you're able to get that. I know Canva too is also doing that as well. And funny enough, I realized that even when you're hosting your website or your app on Canva, it's even cheaper than buying or hosting your websites on the other domains and all that. Okay, so these are some of the things that you need to look at. Now, look at the cost of infrastructure that um, you are paying for and bill your users accordingly. So, like Emmanuel said, you can bill them based on users. So, in a company, what we do in Oracle is you are billed based on each user that is using the software. You know, if you can say, okay, if you have 100 users, you can give them a discount of so and so. If you have 50 users, you can do that. I don't know what your software is about, but as you said, look at competitors, how they are billing um, um, their users. Then you can also model that, but also keep in mind the amount of money you are spending on infrastructure. The cost can reduce when you have these tech giants supporting you or giving you funding for infrastructure. So one of the things you need to look out for is also this funding that is coming from these tech giants. I know they are very generous with that, so you can check. I think even Mastercard is also funding AI projects as well. So you can also look at that, and then you reduce. So it also reduces the cost. Then that also keeps you on an advantage over your competitors as well. So these are some of the things I can also add up to what Pastor Titi has also said.
Okay, Pure, thank you very much. But the thing is, this software is actually like, should I say, a first mover advantage kind of thing. Um, I've not seen this kind of software on the market. The solution that is going to, I mean, the solution that is bringing to the problems, I'm sure this is the first of a kind. You get it? And I was trying to pitch this idea to one of these investors, but the developer tells me sometimes when you pitch your ideas, they end up stealing the idea. So he is not interested in us pitching the idea. You get it? So when it comes to the funding, we are doing everything by ourselves, and I'm not sure it's going to be much of a problem. But what we are thinking of now is how to price it. Okay. So when we, let's say it's an institution that has like 100 staff who are going to use the software, if you are pricing everybody one CD or maybe 50 pesos or two cedis, because it's going to be used every day, every single day, we are going to use the software. And if you are pricing everybody like one CD or two CDs or 50 pesos, you don't know how you are going to go about that. And if you are to sell to them to, we don't know how much you are supposed to sell the software. You get it. And we are thinking of which option is the best for us. Is it either to sell to them, because even if after selling to them, we are the ones going to manage the software. And if we are allowing them to pay per head, that ones you are the ones going to manage the software. So it's a little bit dicey here. I don't know. We are developing the software. I know it will go through. At this point, you are developing says the website or something before you end up developing the apps, the application for like Android and the smartphones. Let me put it that way. So now it's about pricing, and hmm, we don't want to sell the idea to you, get it. We don't want to also sell
Yeah,
the idea.
so that's why I'm saying that definitely you are trying to um get more profits. Am I right?
Yeah, as for the profit there, that's the reason why we are creating the app. Aside the
Exactly.
solution, yeah.
Exactly. So that's why I'm saying that you should look at the cost of infrastructure
Mm,
or the cost of the things that you are spending on to build the app. That would inform how you are going to price the app
Mm-hmm. Mm-hmm.
as well. So some apps that we worked on, like I think my colleague Jacob is on the call. Okay. So he can back me up here. There are some like there's a cost per click or per call. Like if you want to use the app, if you want to, I don't know what the app is. Maybe we can talk after the call. Maybe if you don't want to sell your idea. Um so depending on what the app is, what the app does, if you want to, sometimes if you are trying to get data from another app, you know, you can bill the customer per the number of calls that they make, or per the number of entries that is coming in from the other system to your system. You can bill the customer when it comes to that. That's what I'm saying, that you can bill per user, you can bill per call. Sometimes some companies bill per model. So you need to do a lot of research. So you can look at companies like Odoo. Odoo has one of the cheapest um, pricing models. You can research on that and then learn from them as well. Um, Also, I don't know. I feel like you can speak to investors. There's a way of going about it. You make each investor sign an NDA. You know, as you are saying, whether they fund it or they don't fund it, you don't really, for the lack of better word, you don't really care at this point. You know, you are looking for your money, and so before you talk to them, you make them sign an NDA. I know a friend who that has worked for him so much. He makes you sign an NDA before he even talks about his product, and now his product is well funded. His product is funded by Google. He has funding from Amazon as well. So it's also dependent on the kind of application you are looking out for. So maybe we can talk after the session, and then we can see how best we can go about it. If you bring me an NDA, I'll sign it, and then I will be able to help you.
Okay, that's I'll call you. Yeah, I can hear you.
Okay, okay, good. So I didn't hear your last words.
So Timothy mentioned that he was going to call you,
Okay,
so
okay,
that you workshop this. Yeah.
okay. Jacob, I saw your hand up. I don't know if you wanted to answer Timothy's question or you wanted to ask your.
Oh no, I just wanted to address Timothy's question, but I think you've just said exactly what I was coming to say. Because when it comes to pricing, it's for software, it's a whole. You have to make a lot of research on this because the software you are in to get money. You are in to get money. For instance, the software we work on is Oracle, and how they do their pricing. They do their pricing one per head. When I mean per head, for instance, let's take a look at the model H, the human resource. For every human resource, Oracle charges they charge in dollars, so they charge per employees. So if you are having, let's say, 1,000 employees and Oracle is taking, let's say, $60, just imagine times 1,000, and that's just for the employee. Now, when you talk about the models, the things you have to do, like creating of absence and all, the Oracle charge for all those things. You see, that's how they also get here. So I think more research has to be gone, be made for the pricing, so that you get more money from this. So will you talk to Pearl? Talk to Pearl. If she needs my input, I can also help.
Oh, okay. Thank you.
You're welcome. But mind you, Oracle is very expensive. It's for bigger enterprises and all that. So I don't think that will be a best place to start. But when you call me, we'll figure it out. Yes. Okay. Please, any other question? I think I saw a question in the chat. Okay. Irene is asking, how does one build an online business?
Pearl, is this for me? Okay, so when we
I
say
don't know
online business,
if you want to address it.
okay, I don't know if we say online business. I don't know whether we are looking at e-commerce, or another angle. I mean, what exactly are we doing online? What are we selling online? Definitely, you need a platform. If you have a product that you are selling online, definitely you need a platform. Of late, there's a lot of trading that's going on social media. Okay, a lot we call it on. I don't know if that's what we mean by online business, but people will have products and they want to sell. They build a platform, they build their social media handles, and then they begin to trade online. If that is what you are talking about, then I can tell you have done something similar. So many years ago, I was selling ladies' bags. Well, I'm not sure you know I've sold ladies' bags before, but back
You
then,
keep surprising me.
back then I used to go and get ladies' bags, nice, nice bags from Tudu. Okay. Then importing from China wasn't really a thing now. I'll go and get those bags from Tudu. I was still working as a banker anyway. I'll go and get those bags. And when I bring them home, I have a young guy. I bought a phone for him. He will take very nice pictures and post them on Facebook. Then IG was trading on IG was not really a thing. TikTok had not come. But we're doing much of Facebook, or created a Facebook page, and then we do that. We would boost the page with you get some few dollars, and then you boot the page, you reach out, and then you have people reach out to you, and then they buy your product. If that is what you are looking for to do, then one thing I would say is that number one, you should look for a product that whether it is trendy, whether you want to do daily essentials, you are looking at something that people would want online. Okay, people would want online. Number two, the second thing that you also have to look out for is how you get the products to the people when they buy online. Do you have a delivery system that takes care of that? Number three, how do you build trust online? Because people are scared, they want to send their money to you, and then your goods will never come, or what I ordered versus what I got, something like that. You don't want to have any of those challenges. would you want to tell your customers that, okay, now you pay on delivery? So you are now building some trust with your customers. You want to look at all this. But the key thing that you should know is what product you want to trade. What services do you want to give that you want to do online? The beautiful thing about going online is that you have the luxury to reach a lot of people within the shortest possible time. It's going to cost you some money, but if you build an online presence, which I think right now is the way to go, it goes a long way to help you. If you maybe you have some details or you want to be a bit specific, then maybe we can help you out in doing that.
I think so. I know Irene sells ladies' clothes on her status. I don't know if that's what she's talking about. Irene, is that what you're talking about? Okay. So yes, she sells ladies' clothes on her status.
So, I mean, doing ladies' clothes, for instance, is one of the easiest products that you can actually take online. I have a client, she doesn't have a physical presence, but if I tell you the amount of sales she does in a month, I'm sure you would ask me how does she do it. But she doesn't sleep. What she does is she takes pairs of the clothes, pairs whatever she has to pair at night, and making sure she's taking very good photos. And you need to pitch the product. Whatever you send out there is a pitch, okay? Because the person is not there to examine the product physically. So you need to give them some good evidence, okay, something that will really attract them to the product. So if you go to places like maybe AliExpress and you are buying, you are likely to see about 3 or 4 pictures of a certain product giving you different from different angles. And that is what probably you want to give to your customers, number one. And then you should build an online presence. Online presence goes beyond just yes, WhatsApp is one of the easiest way to reach the people, but you can now begin to direct traffic from your status to some other social media channels, like maybe a TikTok or other channels like YouTube, or other channels like what do you call it, IG, or some other social media handles or online presence. You may also want to register your product as a vendor with some e-commerce, okay, e-commerce platforms. Um, I'm not too sure the modalities around that, but if you know some e-commerce platforms that are coming up, you can actually register your business as a vendor there. And what it means is that as these e-commerce businesses drive traffic, people who are visiting those sites can actually see your products and then they buy from you. So these are some few tips that I can give.
Okay, so another channel that works very well is Snapchat, especially if we are trying to appeal to people of a younger age. Snapchat works very well, and also you can also see. I mean, you can contact me. We can help you set up these channels. We can also help you set up a website, and also help you drive traffic to the websites and all that. We can help you set that up so you can see me, and then we'll take it up from there once you want to do something online as well. So you can call me maybe tomorrow, and then we'll take it up from there. I mean, is that okay?
Yes, please. Thank you very much.
Okay, Chris. I can't mention your name, so I keep shortening it.
It's Chris Brianna.
Oh, Chris Brianna. Okay.
Yeah.
Is it me or Pastor Titi?
You, I think regarding the Snapchat thing, I've been having like
Okay.
plans on doing something regarding that. So yeah.
Okay. So I'm typing my number in the chat. So you can just send me a hi on WhatsApp. Okay, we'll take it from there.
All right. Thank you.
Thank you too. Okay. Any more questions? Okay. If there are no questions, please, what do we say to Pastor TT?
Thank you so much, Pastor Titi, and God bless you for your insightful teachings. Thank you.
Yes.
The pleasure is mine. Thank you too for the opportunity and the platform.
In Pastor TT, we want to say a very big thank you. We've taken 2 hours of your time, and we don't want to spend any more than that. Please, how many of us want him to come back again? I've never done this
Me.
before. Yes. Okay. So we'll do our best to bring him back. I
Come
see my
come
mom
in.
has unmuted.
God bless you, Pastor Titi. You are really inspired. And it was very educative. I'll come back for more consultation.
All right, mommy, you're always welcome.
Pastor Titi, my mother has never joined any of my sessions. So apart from the in person, so thank God you brought her here.
That was here online. It's a tunnel.
Okay, and Pastor Titi, we want to say a very big thank you for what you've taught us. I mean, it's really, really, really impactful, very, very inspiring. It's gone beyond conversations I was expecting to have today. And lucky for us, we have the session recorded as well. And so we can go back and follow on it. And then if we have any questions, we'll come back to you. And as popular requests, our people says they want to have you on because you have other things to teach us. So we'll check in with your schedule and see when we can have you on again. But we are very, very grateful for making time for us. And God richly, 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 richly bless you.
Amen and amen. Thank you too for the platform once again. Let's check in with each other and see when time is available for us to have a convo. Thank you.
Okay. And for my lovely audience, thank you so much for joining. This session would have been complete without you. Your contributions, your questions, your presence alone means the world to us. So what we're going to do is that today we have a perfect recording and we're going to upload it on our YouTube. So once that is done, we would share the link. Yes. Um, Also, our episode was sponsored by MetaAid. We had the CEO of MetaAid join us earlier, but I think he had to drop off because he's in transit. So this is brought to you by MetaAid, Meta8 is a business analysis company. We help startups, be it business analysts, your supply chain problems, your accounting problems, your financial, like, as Pastor Titi said, if you want to um, get funding, you have to have your books right as well. Marketing and all that, Meta Aid helps you when it comes to all these things. And so our website is very simple, is www.metaaid.com, metaaidconsults.com, and you have our numbers there, you have our social media channels there as well, so you can easily reach us when you need any help. Please do well to also recommend us to anyone who is in need of our services as well, and we would we would do well to help you out. Um, with that being said, I would want Jacob to take the closing prayer for us, and then we can hop off.
Father Lord, thank you, Lord, for a successful meeting in Jesus' name. Amen.
Amen. Thank you, everyone. Have a good night. Bye.